Good afternoon, friends. I have breaking news to share with you today. The Internal Revenue Service is ready to finally take action. The agency just confirmed its official plan that will help increase the federal budget. Top experts have also unveiled what is new for the tax filing season this year. Many U.S. households now qualify for these new tax credits that could provide thousands of dollars in extra relief. My dear friends, please do me a big favor and watch until the end of this video. Also, in a video later today, I will be announcing several winners for the Walmart gift card giveaway. If you would like to enter these weekly giveaway, friends, do make sure that you click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, the greater your chances, dear friends, of winning these giveaways.
Mr. President, here we go again. Senators of both parties will once again kick the can down the road. Our national debt is over $34 trillion and growing at an alarming rate. The majority of the Senate meets today to vote once again for more deficit spending. We now know that the Federal Reserve is not only buying the federal debt, they're buying the debt of profligate, large spending states like California, New York, and Illinois. My amendment would make it explicitly illegal for the Federal Reserve to buy the debt of these big spending, profligate individual states. It was never intended that Congress give the Fed the power, and we should make sure that it is explicit. The Federal Reserve cannot buy the debt of individual states. I urge a yes vote.
Senator from Minnesota.
Mr. President, I rise in opposition to the Paul Amendment. As part of the effort to support our economy following the onset of the COVID-19 pandemic, the Federal Reserve established a liquidity facility to help state and local governments better manage their cash flow and those pressures that existed that they faced as a result of the increase in state and local government expenditures related to the pandemic and the delay and decrease of some tax revenues and other revenues. And all of the funds borrowed by municipalities under this program have been repaid. So tying the Fed's hands to prevent it from helping states and municipalities, as this provision would do, would be dangerous. Congress has given the Fed the flexibility to transact in state and local bonds because we knew that it could be an important and helpful tool in times of an emergency, protecting millions of public workers, including police officers, healthcare workers, and other first responders. So as we have seen during the pandemic and natural disasters, uncertainty can hurt both big and small states, and the Fed's simple ability to assist state and local governments in this way can provide stability and allow policymakers to address emerging crises. Preventing emergency programs outright would be dangerous and unnecessary. And finally, adopting this amendment would require the continuing resolution go back to the House and be voted on again. So I urge my colleagues to vote no on the Paul Amendment.
The Internal Revenue Service is initiating efforts to reach out to high-income individuals who have not filed federal tax returns in the past 7 years, aiming to recover millions of dollars in unpaid taxes. Notices will be mailed to 125,000 high-income individuals who have not filed federal income taxes since 2017, with the initiative commencing this week. Among those, 25,000 notices will target individuals with over $1 million in income, while the remaining 100,000 notices will focus on those with incomes ranging from $400,000 to $1 million between tax years 2017 and 2021. According to IRS Commissioner Danny Werfel, the IRS has intermittently conducted the non-filer program since 2016 due to severe budget cuts and staffing constraints. Despite possessing information about non-filers, limited resources hindered the pursuit of these cases. However, utilizing funds from the Inflation Reduction Act, the Internal Revenue Service is revitalizing the non-filer program. The tax agency will begin sending out 20,000 to 40,000 letters weekly, prioritizing the highest income categories. While the Internal Revenue Service anticipates significant unpaid taxes in these cases, the exact amount to be recouped remains uncertain, as some individuals may be eligible for tax credits or deductions, and others may be even owed a tax refund. The IRS says that each year, approximately 1 million individuals who are eligible for tax refunds do not file federal tax returns, with non-filers often being lower-income individuals. To facilitate communication with recipients of non-filer notices, the IRS has hired 5,000 to 7,000 customer service representatives and account managers. These frontline employees will provide assistance and address queries from individuals receiving the notices. Looking ahead, the Internal Revenue Service seeks sustained annual appropriations from Congress to support its modernization efforts, with a proposed budget increase to $14.1 billion for the remainder of fiscal year 2024. And that is up from the current $12.3 billion annual budget. Also, friends, according to Yahoo News, Americans are increasingly spending rather than saving. It is a trend that has supported economic growth, but may wane as households seek to bolster their savings in the coming months. The shift in behavior, fueled by a desire for more cash on hand, has contributed to a decline in the personal savings rate, which was 3.8% in January, well below pre-crisis levels. Historically, the saving rate has averaged about 6.2%, and economists anticipate that consumers will aim to save more this year, potentially dampening consumer spending growth. This comes at a time when consumer spending accounts for approximately 70% of U.S. economic activity. Several factors have influenced American saving and spending habits, including the volatility brought about by the crisis. While the saving rate surged to an all-time high of 32% in April 2020, amid widespread lockdowns and government stimulus checks, it has since fluctuated, reflecting changes in economic conditions and consumer sentiment. Well, my awesome and amazing friends, that is the end of my daily stimulus update video for today. My dear friends, in a video later today, I will be announcing several winners for the Walmart gift card giveaway. If you would like to enter these weekly giveaway, friends, please make sure that you click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning these giveaways. Thank you and have a wonderful and very blessed day.